Okay, good morning, you beautiful human beings. Guys, it is Monday. We are halfway through January, and it's just been an absolutely jam-packed month. So if you're a brand new member with us, just a massive shout out to the more than 600 people who joined our brand new community over the last couple of weeks, 2-3 weeks, right? So if you're one of them, let us know, put your hands up in the comments. Let us know if this is your first time joining us, watching live or after the fact. I can see Petunia is already in the house, jumping in and saying what's happening. Now, if you aren't yet a part of our community, down below, hit the link. It's an absolute no-brainer. There's nothing else like it in the world right now. Absolutely free. Everything you need to know and so much more down in the link below. All right. Now, guys, we have a jam-packed week. First and foremost, today is a US public holiday. So what does that mean for the markets? It means markets are generally just a little bit slower, right? We see a little bit of less volatility, a little less movement in the markets, right? So we are still going to be analyzing. We're still going to be looking at trades. Our amazing team will be issuing trades as and when ready. But we just add a little bit of caution on days where the dollar is just less volatile, right? So still makes for good trading. And specifically for those of you who are going to be teaching our brand new scalping strategy, days like this are an absolute dream because it gives you lots of entry and exit points. Now, if you don't know what that is, for Premium Plus clients, I'm going to be having our first mentorship meeting Saturday, the 27th of January. We may make it even sooner than that, but on that day, we're going to be taking you through the strategies for 2024. I'm going to be giving you detailed step-by-step brand new trading strategies in order to scalp, in order to swing trade, in order to take trades in markets, exact entry and exit conditions that you can follow to absolutely dominate the market. So a little bit about that. But listen, guys, I hope you had an amazing weekend. We had an absolute blast. This week is going to be full to the brim with a bunch of things. This week, we are redesigning the studio, the layout, the feel, the concept, etc. So that's happening somewhere in between. It is also my mother's birthday this Friday. So I'm doing a little bit of traveling up and down, just obviously honor the woman who 9 months in the womb just to be here with you guys to print money in the markets, right? You got to honor that. You got to give love where love is due. And we'll see Garmin's in the house, and we'll see Bainant's in the house. So beautiful Monday to you guys. Now, a lot to discuss this morning. We're going to try and jam pack this all into and compress it into the next 10 minutes. So if you're ready, let's get going. If you're joining us, let us know where in the world. Give us a beautiful warm welcome this morning. I'll give you a shout out. So I sent a news article into our platform this morning. You can go ahead and read that, obviously dive deeper, but I just want to point out a few things from that article and just really what is happening this week. So as you guys know, we're going to have, earnings season. We still continue to see banks, a lot of financial institutions give up some of their earnings reports, but this is a great article. It really breaks down, where the market is currently sitting. Overall, and I just want to point this out, is that if we have a look right at some of the advancements on the markets for this month, right? Something like the Dow Jones has up almost 40% for the year 2023, right? So 40%, just over 40%. And again, I just want to encourage you guys, when banks say that they'll give you 6%, etc., where do you think they're putting their money, right? They're putting a lot of their money, they're diversifying into these areas. Now, again, as traders, we have leverage, right? And that means that 40% could be 4,000% for us done in the right way. In the same way, if done wrong, it also can be hemorrhaging accounts. But I just wanted to point that out. So this article, somewhere in between, speaks about the performance of the S&P, of the NASDAQ over 2023. And as we saw, very strong rise in the markets yesterday. However, I do want to come down to one particular sector I just want to touch on really, really quickly. And we just want to quickly talk about it. And the big thing here in this article that I found out is that, or that was quite interesting to me, is that investors are pricing in a 77% chance that the Federal Reserve will start the rate cuts by 0.25% in March already, right? Up from the 65% that came in last week. And if you guys remember, the whole discussion on the Fed was that, hey, right, there might even be rate cuts in June, July this year. And that's what the markets were freaking out about, saying, wow, rate cuts June or July, this is amazing, right? Markets are starting to price in even sooner than that. So we're about to see some of the most crazy trading conditions of all time. And let me tell you, when the Fed starts those rate cuts, guys, you want to be involved in the markets, right? Because those rate cuts are going to signal to the whole market that, hey, listen, the Fed believes that the economy is stable. The Fed, by reducing interest rates, removes their guaranteed government-backed securities like treasury bonds and things like that. Their yields become lower and money just starts to get redirected into Wall Street as a whole, right? So if you're not yet a part of trading and you want to see some amazing things, then once we start to see these rate cuts, and that could happen in March, could happen even sooner, we could start to see markets tipping that scale far sooner than that. But let me just tell you, that is going to be a wild ride. Now, things like this, opportunities like this come, whenever we have a recession, right? Because again, we have a recession, everyone panics, economies start printing money, lowering interest rates, just to stimulate the economy. Then they raise interest rates, they try to fight inflation. On the other side of that, which is where we are now, once the storm has passed, right, you get that calm. We're in that beautiful season right now where once the calm blows by and everybody understands the markets are a little bit safer, the economy, US economy is safer, money's just going to start to get poured back into Wall Street, right? And that gives us major opportunities across the board. So again, this comes every couple of years, 5, 6, 8 years, more frequently, truth be told, now more than ever, but it's still a opportunity nevertheless. So definitely worth reading up. Now, the one thing I am obviously going to take with a bit of a pinch of salt here is when they give their forecast, right, they're just really giving an averaged out forecast. We're not seeing a step in the sense that, we're not seeing that in March, they stepping, 0.25%. They're kind of just like trickling down an average and estimation. So I just want to put in a word of caution there that they're obviously just averaging out that explanation on the rate cuts. And if anything, this newer forecast, right, in terms of the blue here, is how they're more aggressively forecasting what those rates may end up being, right? So definitely something to watch, definitely worth reading in terms of an article. It's going to give you a bunch of things to obviously dive through. Now, obviously the market's still going to focus on the Magnificent Seven, right? And when we talk about technology sectors, we talk about the banking sector, we're obviously getting a lot of banking data, earnings reports coming out now. But really what the markets are really looking at is these technology platforms or these technology names that have really held up and contributed, as I was mentioning a little bit earlier, up to that 40% of some of the growth of some of these big index stocks. That is what the markets are waiting out for now, right? Meta, otherwise Google, Meta, otherwise Facebook, Alphabet, otherwise known as Google. They obviously in one sector, Amazon and Tesla obviously falls in another. So those big names are still yet to give out their earnings for the quarter 4. But also, I just want to also talk about that there is quite an interesting trend that this article also picks up, that in terms of the amount of members that give a forecast of an essential downturn, right? So remember, when we talk about earnings reports, some of these big traded listed companies give forecast or guidance on what they expect to be earning, their EPS, their investments into R&D, their revenue, etc. They give those forecasts. Now, what a lot of companies do and how they get tracked is they look at, all right, in the fourth quarter, how many of these companies start to issue warnings that, hey, they might not make their goals, etc. And this article points out that there's a slightly higher 10-year average, right? 25 of the members that are allocated within the S&P 500, right, indicated, of these major companies, indicated they might miss their earnings reports for quarter 4, and the average for the 10 years is 19. So it's quite a little bit of a standard deviation more than, right, general of these major companies missing earnings. So just something worth noting. So again, this article is kind of hinting and giving a little bit of propaganda here that it is likely that some of these big names will be missing their earnings for quarter 4. However, we take all these things with a bit of pinch of salt. Now, moving into some of the fundamentals for today, obviously, I just mentioned there is a US public holiday, and that's a banking holiday. So it just means that there's less volume in the market. It's not removed completely, but just less volume in the markets. Just quickly shout out, Enlightened Minds is joining us. I can see Claude Jonas is joining us. QC Shutters to Mello. Good morning, you beautiful human beings. So again, US public holiday, just a little bit of caution. Now, there's something I want to cover that we missed last week. We did not discuss just because of the amount of things happening in the market. We killed the market. We had insane trades. Guys, if you weren't part of Premium Plus last week, I don't know what the trade count is, what we published there, but I think we were well over 3,000 pips for the week as part of Premium Plus. Remember, if you're part of the free group, we give 500 pips of profitable trades, right? Of profitable trades. So even if we take a loss, we deduct that. We give 500 pips of pure profit every week within the free group. Now, what's 500 pips of pure profit? What is pips? Again, that's in our academy. It's in our social area. You can learn about that. But essentially, when we talk about pips, right, the amount of trades you take, the size of the trade you take, even if you take the smallest trade humanly possible, is 0.01, right? That's 10 cents US per pip. 500 pips we give out for absolutely free. That's $50, right? It's about 1,000 Rand, right? Is that enough to change your life? Probably not. Is it enough to make money and pay for Premium Plus and then unlock a further 3,000 at the smallest possible trade results? Absolutely. Now again, 500 pips at $1 per pip, $500 at $10 per pip, $5,000. So scale it as you wish. That's part of what we do in Premium Plus. So if you aren't aware, now you are. And let's jump into what's happened with Bitcoin over the last week, because it's quite a scandal, right? So for those of you who know, don't know, etc., there was obviously quite a bit of turmoil on Bitcoin. I missed this, right? I heard people speaking about it, but I missed it, right? So the first thing that happened last week is that the SEC, right, pretty much the FSCA for the US, they regulate all, financial securities, etc., right? Their X accounts, otherwise known as Twitter account, got hacked on the 9th, right? The 9th of January. And on this account, the hackers published that Bitcoin spot ETFs have been approved. So listen to this, right? And again, I've spent a bit of time reading this up this morning. If I got this wrong, please let me know. But it's actually quite a funny story. So they published, hey, listen, Bitcoin ETFs, the account got hacked, and then the hackers published Bitcoin ETFs have been approved, right? The markets freaked out and said, oh, wow, this is amazing. Now, what is a Bitcoin ETF? What is a crypto ETF, right? ETF stands for Exchange Traded Fund. And the common move that we're seeing right now is that these exchange traded funds are being created where almost like you would consider an indice fund, right? Indices take, Microsoft, Google, Apple, etc., and they bunch these together. Also, side note, Microsoft just overtook Apple as the most valuable company in the world. But anyway, side note. So indices are these major listed companies. ETF, exchange traded funds, are very, very similar in their construction, where companies, another famous one would be Cathie Wood's ARK, right? ARK ETF. You can go ahead and Google that if you want. They're taking these assets and these instruments, and they're bundling it together to create a new type of product which has Apple, Microsoft, etc. And that company is responsible for buying and selling and adding to this fund the most profitable instruments or securities to make sure the investors buy into that ETF, that it's something that gains over time. So exchange traded fund, right? Now, Bitcoin, crypto as a whole has been fighting not only to be recognized as a security, and there's pros and cons for that, but have been applying to create their own ETF, right? So instead of just buying, let's say, a bit of Bitcoin, right, one coin, you can now get into a fund that has an amalgamation of these different cryptos, right? And their likelihood, or their goal, is to create growth, right? To create a profile that investors look at that's diversified enough to say, hey, this is something interesting worth getting involved into. So that's a little bit of what an ETF is. Now, hackers jumped into the SEC's Twitter accounts, hacked and said, hey, this is approved. And we saw the price of Bitcoin going nuts. Right, we looked at some price action formations, saw markets going in and out of formations. You guys remember that last week, right? So this happened on the 9th, right? That the SEC said, hey, listen, our account's been hacked, and they posted this. They very quickly figured this out. And then the crazy thing is, on the 10th of January, right, the SEC then approves Bitcoin ETF, right, spot ETFs, as a valid security. Right, so the Bitcoin then took another sort of spike. So the fake sort of news kind of had a net positive effect and then a negative effect, and then the very next day it was announced that Bitcoin spot ETFs have been approved, right? So again, the world of crypto is definitely going to be taking much of a forward seat or front seat in terms of some of the things that we're going to trade. And Ethereum is obviously riding hot on the coattails there, right? Ethereum Classic had a 37% gain in the last week, just on the fact of how people are getting excited that Ethereum might also be included as a ETF type setup. Right now, a lot of crypto platforms are applying and writing white papers into the SEC to try and get approval to be a licensed financial product, if you will, that can be added into the market. So very, very interesting time. I think we have not even yet seen the tip of the iceberg with regards to this, with regards to the markets, right? I still think we're going to see a ton more across the board. So just a few interesting things I really think it's important for you guys to be aware of and to know about. I still think we're going to see a lot of volatility this week after today, right? We're still going to see a lot of trading conditions. Now, first week of January, we saw low volume, difficult trading conditions, difficult to trade through, right? The week thereafter, which was last week, we absolutely smashed the market. We had one or two troubling gold trades, but we absolutely smashed the markets across the board. This week, I expect we're going to continue to dominate the markets as we always do. So if you're part of the free environment, sit back, relax, enjoy, go into the classroom, start, where to start, chapter 1, part 1, etc., and start your learning journey. If you're part of Premium Plus, you're exactly in the right posture. You can't get any better than that, right? Now, in terms of what's happening for the balance of the week, I'm going to be looking at what special shows we might end up having. And again, my goal really this week, and even ideally this weekend, I'm just saying this, the word of caution, I would love to have the Premium Plus mentorship meeting this weekend, this Saturday. Now, again, I've announced it for the 27th, but I'd like to have it earlier because I'm just so excited to teach and show you guys this brand new strategy, which we're refining day by day, but it's a step-by-step of just how to take things to the next level, right? We've got a lot of questions about how do we analyze the markets, how do we get trade opportunities, etc. This is going to be that first step to putting the power into your hands, which is what DVDM Markets has been created for, right? To empower people to learn, understand, and ultimately be profitable and consistent in the market. So a lot busy happening. I've spent a little bit of time rambling this morning, but again, it's my passion to bring to you guys what's happening in the markets. This weekend, I'm spending some time just thinking about, where the business is going, where we are going, etc. And guys, it is such a privilege to do what I love, right? When the markets are not open, you can ask Marsha, I'm constantly looking at my phone, just thinking about the markets, thinking about what's going to be opening next. And the market's open, I just cannot wait for that, right? So it's a privilege to be able to do what I love with every single one of you. And I hope to impart that love and just the amazing opportunities that exist in the markets once you understand the real risks that also exist and you've made peace with that, you've calmed your risk management, you've calmed that level of greed that gets a lot of people into trouble in the markets. Once you've calmed that and accepted that, then the markets are something to really get excited about more than anything else. But outside of that, I'm going to end this here. Otherwise, I'm going to continue rambling, and we all got things to do. So if you're joining me live, I really appreciate you. If you're watching this after the fact, welcome. I think I've greeted Tamela already in the house this morning. So go ahead, stay tuned within our Premium Plus area. Obviously, all trades get given, including indices. But if you're in our free area, we will be sending trades as and when they become available this morning. Other than that, I'll keep you guys updated. If you have a look at the calendar, I have updated all shows for the week within the calendar, right? So if you want to go ahead and add the calendar or the shows to your Outlook, to your email, whatever the case may be, super simple. I just want to go ahead and show you guys this really quickly. So if you go to the calendar and you have a look at this week, I've updated all shows. So all the links are there. So example, if you look at tomorrow's Pounds Breakfast, it's already there. You can go ahead and add it to your calendar. So it pops up, you've got the link, it's done, it's dusted. I've done the same for Premium Plus, and I've also included the dollars for lunch shows. Last item I just want to quickly talk about, if you don't already have your TDM live account, guys, we only use TD Markets. We don't use Rocket FX, any of these B-book rubbish things that are popping up these days. We only use pure STP, right? Which is the most conflict of interest free way of trading. TDM, pure STP, gives us real access to real markets, right? That's what real trading is all about. Now, if you don't already have your TDM live account, right, super easy. Again, the link is down below. And once you select it, people often get confused. Okay, what do they do, etc. Once you select the link, you make sure you selected clients and you fill in a bit of your info, right? It's going to ask you some tricky questions, right? And this is to make sure that you understand the markets. If you don't know what's happening, just be answered truthfully and say, I don't know, or give your best possible answer. Now, the trading account and the type of account that I use the most is the TDM Max account. That's only because it offers insane leverage, right? It allows us to have 1,000 to 1, 2,000 to 1 leverage, allows us to do some pretty amazing things in the market. Now, again, not that we use all the leverage, but that it is available, right? It's far better in my particular case to drive a V8 with 600 horsepower. We don't use it every day, but when you do want to use it, it works out to be pretty fun and pretty handy, right? Outside of that, guys, appreciate you all as always. If you need any help, drop us a message inside of school. I see a lot of people still message me on my private number on my phone. I don't get to those messages. I'm not going to lie to you. Some of you, I see a message from over a week, 2 weeks ago. I haven't got to you. Within school, we have team, we have staff, we have people there to look after you. So if you message inside school, we'll get back to you. As always, you know the drill. Much love. Trade safe this week. We're going to smash it. As always, we'll see you a little bit later. Until then, goodbye.